Wolfgang, good to see you. Good morning. You actually say that a stimulus deal is bad for the U.S. dollar. Why is that?
Well, if you have a stimulus package which actually keeps printing money, and in other countries you don't, you're going to have more, quite frankly, dollars, which then means that there's more supply and not as much demand. Therefore, the price would go down. But I think what you're actually seeing is that are we having a stimulus package? Are we not having a stimulus package? What this looks like. What's more dangerous for corporations, here's the volatility that's been creating ever since, quite frankly, March. So you're trading volatility at a significant high. And the corporations are not in the business to trade one currency versus the other and figure out whether the dollar's going up or down. Corporations really are looking to be currency agnostic. They would love to work without the impact of this volatility. Obviously, that's not doable unless you manage your exposures properly. And so you have companies who really understand the foreign exchange exposures, which then translates into how good, and this is, I think, really important for investors, is how good are corporations is actually managing their entire liquidity. Because liquidity might have been number 4 or 5 on priorities in the past, but currently it's number 1. It's your blood life. People are understanding that in these tough times, you really need to look at the entire liquidity of a company, and a good signal of that is how they're managing the dollar.
When do you think this dollar weakness trade will unwind, and what's the trigger?
Well, I don't know is a short answer of that. What I do know is that the volatility is going to stay here for quite a while, and it's going to be a pain for companies. When the dollar goes down, they're making more money abroad, which actually is good for U.S. companies' revenues. So all of a sudden your dollar goes down, but your jeans that you're selling in Europe, euro is going up, so you're actually making money on that. But on the other hand, if you're producing in a country where your dollar is getting less, then all of a sudden that's not good for you. So you have these things that are going back and forth, and directionally it's very difficult to look at companies and see whether it's going to be good or bad for them when the dollar goes down. What is important here, though, is what companies are not being impacted by it at the bottom line because they're managing it correctly.
Wolfgang, talk to us about some of those companies, if you could get specific. Which companies are managing their currency issues? You say the goal is to be currency agnostic. That's tough for a multinational. Which companies are doing it right now?
It is tough for multinationals to do, but it is very doable today. The technology is there to do it, and so they can manage it. So if you're looking at companies like Bristol-Myers Squibb, basically unimpacted, a massive company, large company, they had less than a $3 million impact due to foreign exchange. You go to Columbia Sportswear, very minimal impacts due to their revenues and to their bottom lines. You have companies like Google, who for years have been doing this really well. They understand their exposures and they can adjust it at any time. And I think that's the important part here. Now you have companies like an Anheuser-Busch in comparison to that. When you really think about this, is a massive difference. You got a company like Bristol-Myers Squibb, basically immaterial impact, and they're doing a good job on liquidity. And then you get a company like Anheuser-Busch, who lost last quarter alone $532 million. How many jobs would that be? Lost due to foreign exchange. They obviously don't understand their exposure. And if I'm an investor and I'm looking at what company is going to be good at managing that, that's probably not one I'm going to, or one that I'll be very cautious as to be say, look at another company. Now, this is a sweetheart in the IPO business for years, and everybody loves this for the last couple of years, company called Splunk. Great product, but how well are they managing their currency impacts? We talked about this 2 weeks ago where we said, you got to kind of start worrying about this. You got to look at companies like that. You can look at their their quarterly statements as well as their annual statements, and it clearly states in there whether they're making or losing money. And that's a great indicator of how they're actively managing their entire liquidity. Now, they're growing great, so should it be immaterial? Maybe, maybe not. Splunk could be higher priced in their stock market if they got this part under control. And that's what investors need to look at.